Good evening, guys. Welcome back to another live stream. How are you guys doing today? What a roller coaster ride we had in today's trading session. Let me see. My live stream seems to be offline, but I'm already streaming. You guys should be able to see me, but that doesn't seem to be the case. Yeah, should be already streaming here. There you go. Doesn't seem to be the case. Good afternoon, guys, or good evening, depending on the case. How are you guys doing today? Hello. Hi, Micaela. Hi, Kevin. What's up? Welcome back to another live stream. Wiki 729, CH, SI. Hello, Leslie Williams. How are you guys doing today? What a roller coaster ride we had in the markets. Jesus Christ, up and down, up and down, up and down. We took a very nice trade with Microsoft puts. I posted that trade in my channel. It was a quick trade, and we managed to buy Microsoft puts right at the top, right at the morning high that was reached by the bulls earlier on today. Nice day trade over there. I ended up making $170. And when it comes to the markets, guys, we had a red day other than the NASDAQ. The NASDAQ went up 0.57%, but the Russell went down 0.06%. The Dow went down 0.46%, and the S&P 500 went down. I mean, the S&P, for the most part, closed flat. It went down 0.03%. You guys know that today we had the CPI data report, the inflation report of January. And this report, we can make the case that came out in line, nothing spectacular to either the upside or the downside. So the core CPI, which happens to be the most important metric, happened to come out in line, reflecting an increase month over month of 0.4% versus 0.4% estimate. Something that is worth pointing out about that metric, which is the most important metric that the Federal Reserve pays attention to, is the fact that it didn't go lower month over month, because last month we had a reading of 0.4%. When it comes to the headline reading, the CPI year over year, it came out at 6.4% versus 6.2 estimate. In that case, we had a little decrease month or year over year, we can say, when it comes to this metric, because the previous reading was 6.5%. But let's remember that the last three reports were revised up by the Bureau of Labor Statistics, and by 0.10%. So if this report also happens to be revised up, then this is a sign that inflation is very likely to remain sticky, and that might be potentially forcing the Fed to go, as you guys already know, higher for longer. We had some changes when it comes to the Fed futures. So the terminal rate of the Fed futures were, before today, before this report came out, was around 5%, and now we had an increase when it comes to the terminal rate of the Federal Reserve. The markets are now estimating that the Fed is going to pause, I think that in the June meeting, let me see. Yeah, let me see, May, this is May, there you go, June, we have 5.25%, yeah. So the markets are pricing in, as of now, a pause for the June meeting, and they are also pricing in a pivot or a rate cut for the December meeting, in which case the Federal Reserve, according to the Fed futures, is going to be decreasing rates from 5.25% down to 5%. So we will see what ends up happening over here. And the markets didn't pick a direction, really, guys. We just, and despite the fact that we saw a lot of volatility today, we remained within a range somewhere between $415 and $408. We had a decent close above the ascending 5-day moving average and above VWAP as well. And now the question is, how high can the bulls go? Maybe we could see a test of 418 bucks. I think that this is very likely to be a very tough spot for the bulls in the upcoming trading sessions. And when it comes to support, I think, guys, that as long as the bulls remain trading above 410 bucks, this is a previous resistance back from mid-December and also a previous resistance back from late November. They are in total control of the S&P 500. The trend is up. And in, let's say, major time frames, as long as the bulls remain trading above this downward sloping trend line that comes from all-time high, so let's say that as long as the bulls remain trading above 392 bucks, there's nothing wrong with the tape, and they can keep on going higher. In my opinion, I think that 418 bucks is going to be a tough spot for the bulls. If they happen to be able to take out 418 bucks, then the next important gap is going to be up to $424. This is a previous resistance back from early August. So nothing wrong with this chart. And as of now, we have a situation in which the fundamentals have deteriorated let's say, in a noticeable way. But on the flip side, the bulls are saying simply the trend is up, the charts look very well, and we are going to keep on buying dips. And that's the strategy that for the most part has been working out for most people out there, guys. But last year it was selling rips, and now for the most part we need to keep on buying dips until an important support happens to be taken out by the bears. In my case, 410 bucks. If that support happens to be taken out on good volume, then that is going to be, let's say, a warning sign for the bulls out there. If you have any requests, please let me know if you want me to go over any given stocks. Let me take a look at Yahoo Finance once again. Crude oil went down today 1.57%. The Dixie, the US dollar, ended up having, let me see, I didn't check on the Dixie. I pretty much broke even. It went down 0.09%, and the 10-year Treasury yield, or TNX, went up today 1.18%. This is another warning sign, guys. As you guys can see over here, the 10-year Treasury yield went up today 1.18%. And the 10-year Treasury yield is inversely correlated relative to higher multiple stocks, tech stocks, and growth-oriented stocks. And those were the stocks that did the heavy lifting today. Take a look. This is some sort of, let's say, a contradiction. So today we had higher multiple stocks. When I say higher multiple stocks, I'm talking about tech stocks. The tech sector went up today 0.43%. And consumer discretionary, you guys know that Tesla had an unbelievable day. It went up today something like, I don't know, like 8%. Unbelievable day for Tesla. So Tesla, for the most part, was the stock that did the heavy lifting today. And Tesla belongs or trades inside XLY or consumer discretionary. This sector went up today 1.20%. These two sectors typically go lower when the 10-year Treasury yield goes higher. So someone might be lying over here, but in the meantime, higher multiple stocks and tech-oriented stocks, and ever since this year started out, have been the stocks that have outperformed the rest of the stocks out there. So let's see how high they can keep on going. Tesla. Sipa1 says over there, and Daniel Ruiz, what's up, amigos? What's up, bro? How are you? So yeah, Tesla was the stock of the day. Let me pull up here the chart quickly. Be careful chasing Tesla over here, guys. This stock is still in a downtrend. As you guys can see, a major downtrend. By the way, we have a downward slope into 100-day moving average, and we have a major level of resistance coming up for the stock of this company at 215 bucks, which is a previous resistance back from early February, in which the bulls were rejected in a very clear way. Let's just put it that way. 215 bucks happens also to be a previous support back from early July. So there's nothing wrong with the chart, despite the fact that we are still in a major downtrend. But the push to the upside, guys, that we have seen since early January, in my opinion, is a bit overextended, even though the RSI of Tesla is not that elevated. We can see the RSI on the 4-hour chart at 66 points. So a bull would argue that Tesla is not that overextended. If the bulls sorry guys, if the bulls happen to be able to take out $215, we have another gap up to the downward sloping 200-day moving average at $226. Keep in mind that this moving average is going lower, has a declining position, so this is going to be, if $215 happens to be taken out, this is going to be another very tough spot for the bulls of Tesla. Tesla is trading as of now above the 100-day moving average, which also has a declining position. So it is positive that the stock is trading above the 100-day moving average, but the 100-day moving average is declining, and we have an upward sloping 5-day moving average, which happens to be another good sign for the bulls of Tesla. I'm not going to be chasing Tesla over here, guys. Maybe a retracement down to, let's say, $197. This is a previous resistance, but back from early December could be a spot in which I could be thinking about grabbing calls, but I am not a chaser of Tesla at these levels by any stretch of the imagination. I don't think that if the rally keeps on going, if the rally keeps on going on, I don't think that Tesla could go higher than $225. As I just told you guys, I am not a buyer of overextensions, and this push to the upside that we have seen in Tesla since January, in my opinion, is overextended. Let me take a look at the market structure of Tesla. Let me see what supply and demand is looking like over here. Let me pull up market structure. So let me see. Nothing wrong from a market structure standpoint. We have an ascending demand, and we have a declining supply that actually is below the average. As you guys can see, you guys can notice the demand on the top of this chart, and you guys can see the supply at the bottom of this chart. So we have a very compelling market structure for Tesla, an ascending demand and a falling supply. Yeah, maybe we could see, and now that I am taking a look at the market structure, we could see this gap filled up to $224. I'm not going to buy a breakout over here in the case of Tesla, and I would be rather a buyer of a pullback down to $197. Tesla, please. There you go. I already went over Tesla. Apple. Let me go over Apple over here. If you have any other suggestions, please drop a comment down below and let me know, guys. Apple. Yeah, this is an acceptable looking chart. Apple went down today 0.42% in a day in which technology went up. That is some sort of question mark that is on the table. Apple closed today's trading session at $153.20. We have a very clear resistance coming up for the bulls at $157. $157 is a previous resistance back from early February, and this is also a previous resistance back from late October of last year. So the RSI is sitting at 55 points. We have over here, we can see over here Apple trading above an ascending 5-day moving average, above the 100-day moving average, 200-day moving average. So there is nothing really wrong with this chart, but I would rather see Apple taking out $157 on good volume and momentum, in which case we might see another push higher up to $165, which happens to be a previous resistance back from mid-September of last year. So watch out for $157. If Apple takes out $157 and starts to consolidate slightly above that level, that could be a sign that the bulls are gathering momentum in order to fill this other gap up to $165-ish. In case of a retracement, let me see over here, guys. $149 could be an interesting spot. $149 happens to be a previous resistance back from early June of last year that, if happens to be visited, could be acting as support. And I think, guys, that at the level that the markets are trading as of now, a bunch of very good news have been already priced in. So as I just told you, in the case of Tesla, I am not a chaser of breakouts over here, and I am rather a buyer of dips. So I wouldn't be buying a breakout of Apple above $158, but I would maybe thinking about buying a dip As I just told you guys, near 149 or 140, 149, 140 bucks, by the way, very close or slightly above the 200-day moving average. Let me take a look at the market structure of Apple over here. Let me see. Apple, what is demand and supply looking like? So we have an ascending demand and we have also an ascending supply, but that is still below the average. So I would say that from a market structure standpoint, there is still gas in the tank over here. So maybe we could be about to see a retest of 158 bucks. As I just told you guys, I am not going to be a participant in this trade. Maybe a retracement down to 149 bucks could be an interesting spot. XOM, LU underscore Melovic. What are your thoughts on ENPH? Lina Maria is asking. Let's go over to ENPH, absolutely. And then XOM, absolutely. ENPH, let me see. So ENPH is the typical case, guys. This was a big winner of last year, and the stock of this company got the stock of this company was sold because we saw a clear rotation when the year started out from the winners of last year into the losers of last year. So ENPH was basically a clear example of that. They just posted a very impressive report, but this was a winner. And on top of that, this is a higher multiple stock, like a higher multiple stock. I think that the P ratio of ENPH must be sitting at 150 points or something like that. So the short is absolutely broken. I have nothing constructive to say about ENPH over here. This is a major downtrend below all the moving averages. We can see a downward slope in 100-day moving average. Also, an almost downward slope in the 100-day moving average. A declining 5-day moving average. Nothing constructive to say over here. The RSI is not that low. We can see the RSI at 41 points on the 4-hour chart. So maybe we can make the case that buyers could be stepping in at around 200 bucks. This is a previous support back from late January, and this is also a previous resistance back from late June. If this support of 200 bucks happens to be taken out, guys, I can easily see ENPH going down to 180 bucks. This is a previous support back from mid-July, so this is not a short that I am willing to trade. I would rather see buyers stepping in. And when I say I would rather see buyers stepping in, I'm talking about ENPH at least taking out or bursting above 226 bucks, which is a previous support back from early January that could be acting as a new resistance. This would be a former support that was broken to the downside and that now would be acting as a resistance. This is a no touch, in my opinion, unless we can see buyers stepping in, as I just told you guys, by seeing ENPH taking out 227 bucks. Very ugly looking chart. And you guys can see these kind of charts. If you take a look at United Health, at ENPH Energy, at Pfizer, most of the stocks that were winners last year, that were sold this year because we saw a massive rotation from the winners, the big winners of 2022, that were not a lot of stocks, by the way, into the losers of 2022. So let me take a look at the market structure of ENPH over here. What an ugly looking chart. So ENPH, let me see. Okay, we have a descending demand, as you guys can see over here. Remember, on the top of the chart, you guys can see the demand, and you guys can read over here demand, and at the bottom of the chart, you can see the supply. So we have a descending demand and a supply that is above the demand, but that looks like it is starting to fall a bit. So maybe if the supply keeps on falling and goes below the average and the demand remains this high, this could be a sign that some buyers are about to pick up ENPH Energy if the stock of this company happens to hold 200 bucks as support. Be careful over here. If you're going to take a trade on ENPH, make sure of applying a very tight stop loss. Left, SIPA1 is asking me. Let me take a look at left. This company posted such a poor report. Be very careful over here, guys. So an extremely but I need to emphasize an extremely ugly looking chart. We can make the case that Lyft is a bit oversold. We can see the RSI and the 4-hour chart sitting at 28 points. But this company posted a very poor report. The chart is absolutely broken from a technical standpoint, major downtrend below all the moving averages. We have a declining 5-day moving average, declining 200-day moving average, declining 100-day moving average. I don't see any reason whatsoever in order to take a trade on Lyft. I would rather see, as I just told you guys, and I have been telling you over here, I would rather see buyers stepping in, and I would strongly suggest to you staying away from these very ugly looking charts. I am not a buyer of downtrends by any stretch of the imagination. So I would rather see Lyft taking out $12, which happens to be a previous resistance back from mid-December, and this is also a previous support back from mid-July. If the bulls happen to take out $12, then that is a sign that buyers are stepping in, and that increases the likelihood for a trade to the upside in order to be successful. Can we short Lyft over here? I wouldn't do it either, guys. I don't see much room to the downside either. A bear would argue, yeah, but if $9.50, the previous support back from late December, happens to be taken out, we can see more downwards pressure. That could be the case. This is a chart that we simply need to, stay away from. I don't see any trade over here, as I just told you guys, unless the bulls can take out $12. I don't know. I don't know who is going to come to buy this stock. I don't see a compelling chart from a technical standpoint, and no one that invests at a long term is going to pick up Lyft either, because this company posted a very, very horrible report, whereas a competitor such as Uber actually posted a very decent report. I think that Uber actually posted a positive EPS. So just stay away from Lyft, please. I am not even. I wouldn't. Let's take a look at the market structure of Lyft. Let's see what is going on over here. Before I pull up the market, the demand and supply information, I guess that we have a collapse in demand and an ascending supply. Let me see whether I am right or not. Take a look. Absolutely, guys. We have a collapse in demand, as you guys can see over here, and an ascending demand. And a collapse in demand and an ascending supply that is above average. So nothing to do in the case of Lyft. NETA on Airbnb. I think that they posted a very solid report over here. We can make the case that this is inflationary. Let me see. This is very overextended. I think that we are going to see a massive profit taken tomorrow as soon as the trading session opens. And why? Well, because the stock of this company, guys, has gone up in a matter of a month and a half, 64%. So we have a lot of market participants holding big gains over here, and I don't see any reason in order to not locking in the profit when you're sitting on big gains, and after having seen and after the stock of this company has seen such a massive push to the upside. So I think that the Airbnb could be potentially going lower tomorrow on profit taking, in which case, guys, if we happen to see a massive gap down tomorrow, watch out for $121. This is a previous resistance at which Airbnb failed on multiple occasions in early February. This is also a previous resistance back from mid-October. Also a previous resistance back from mid-September, and also a previous resistance back from early August. Big level for Airbnb at $120. Please do not chase this stock tomorrow. As soon as the trading session opens at around $135, I think that the stock of this company, and despite the fact that they posted a very solid earnings report, is due for a pullback, is due for profit taking. So I might be a buyer at $120 per share. What did they did? Let me see over here, guys. EPS came in at 25 cents, revenue at $1.86 billion. They are guiding for Q1 when it comes to revenue from $1.75 billion up to $1.82 billion versus analyst consensus of $1.68 billion. Very solid guidance when it comes to revenue for Q1. And I think that they did beat on top and bottom line. Let me see if I can see EPS and revenue. Do I have it handy, Thinkorswim? I don't have it handy right now. I don't have it handy. Well, whatever. Bottom line, they posted a very solid report that this push to the upside is overextended. In my opinion, I don't buy overextensions, so maybe a retracement down to 120 bucks could be a buy the dip opportunity. How about NVDA? Another stock that has been going on an absolute tear. Be careful here, guys, with NVIDIA, Tesla, and Microsoft, and all the tech stocks that have been going on a tear. As I just told you, the markets, and even though the technical charts look pretty well, we cannot argue these markets from a technical standpoint. But remember, we have seen a massive push to the upside ever since the year started out. We have a bunch of gains out there. We have a lot of market participants sitting on a lot of gains. And we could see a bull run anytime soon. I am not saying that we are 100% likely to see a rug pull anytime soon, but it's a possibility. Okay, the markets are priced into perfection as of now, and most of the news that we have known recently, that we have gotten recently, hasn't been very positive by any stretch of the imagination. So my advice, please keep your stop losses tight. Okay, do not buy these higher multiple runners at these levels being overextended without placing very tight stop loss or very tight stop losses, because you could get a pie in the face, and NVIDIA couldn't be an exception to the rule. $230. NVIDIA went up today 5.43%, and it closed the trading session at $230. So we could make the case that we are about to see over here a double top. Not an academic double top, but we can make the case that NVIDIA could be retracing from here down to $206, which happens to be a previous resistance back from late January. And if NVIDIA keeps on going higher, what's the next gap over here, guys? Let me see. What would be the next gap? We have a next gap up to $254. My goodness. We have a previous resistance over here at $246. This is a previous resistance back from February of last year. So this chart looks overextended. This is a higher multiple stock. I'm not saying that it cannot keep on going higher, but be careful. RSI is at 66 points. Yeah, we could see a breakout over here with the bulls taking out $230-ish and maybe filling the next gap up to, let me see, up to $244. I am not going to be a participant in this trade. As I just told you guys, I have been, for the most part, buying dips. So instead of chasing NVIDIA over here, I would suggest to you to wait for a pullback down to maybe $220, previous resistance back from early February, or maybe, or even better, a pullback or a retracement down to $205. And remember, I just told you guys about the 10-year Treasury yield. The 10-year Treasury yield is inversely correlated to NVIDIA, to the NVIDIAs of the world, and the Teslas of the world, and the Amazons of the world. And take a look at the 10-year Treasury yield. It has been going on an absolute tear. This is a warning sign. Let me pull up here a 5-day, 5-minute chart. Take a look. And the bulls managed to close the trading session today above the 100-day moving average. And I'm thinking, guys, that if the 10-year Treasury yield keeps on going higher, we are going to see a pullback when it comes to most of these higher multiples and tech stocks. We are very likely to see a pullback sooner rather than later. So keep a close watch on TNX in the upcoming trading sessions. By the way, guys, keep also in mind that on Friday we have options expirations. Okay, so remember, when we have OPEX our monthly options expiration, we have a massive amount of options expiring. I'm talking about options, futures options, indices options, and individual stocks options. So be mindful of that, because that's a day in which volatility usually goes higher than usual. So if you think that we saw a roller coaster ride today, or that we had a roller coaster ride today, which was the case for the most part, and mostly until noon, get ready for Friday, because weird stuff happens when we have options expiration. I don't want to pie in the face. Be careful, guys. I'm telling you. Some traders don't believe in market mechanics. I use market mechanics a lot. So I am usually keeping a close watch on the DXY, the 10-year Treasury yield, the VIX. And the fact that the 10-year Treasury yield is going higher, that implies that the bonds market is sending out a message that the Federal Reserve is going to be potentially hiking rates higher than the markets are pricing in. And that's not a good sign in general terms for, as I just told you, higher multiple stock, tech-oriented stocks, and so forth. So that is something to keep in mind if you guys are about to take a trade with NVDA, with Tesla, with Apple, with Microsoft, and so forth, and the 10-year Treasury yield, or TNX, is going higher in an aggressive way, then that's a sign that you have to be careful. A bit careful, at least. What do you think about PepsiCo? I think that they beat on earnings today. Let me see. This is a whole different story. This is a consumer staple stock, a defensive stock. So this stock has nothing to do with the 10-year Treasury yield. We can make the case that it might has a bit to do with the DXY, because they have a lot of business activities outside the U.S. But this is a consumer staple stock, nothing to do with the 10-year Treasury yield. I think that they posted a very solid report recently, right? I don't have the report handy, but I think that they did beat on EPS and revenue. Yeah, I mean, this share doesn't say a lot, but at least we have PepsiCo trading as of now above the 100-day moving average, above the 200-day moving average. We can see a semi-ascending 5-day moving average. Nothing wrong with this chart. So this is a defensive stock. So this is let's say a whole different story. If we happen to see a pullback on the Apples of the world and the NVIDIAs of the world and the Teslas of the world, this is a stock that might be actually going higher, might be going the opposite way. So in the case of PepsiCo, keep a close watch on this 100-day moving average at around $175. If we happen to see a process of consolidation slightly above that area, this might be a sign that the bulls are gathering momentum in order to make another push higher, and maybe being able to fill the next gap up to $180, previous resistance back from mid-August. If we were able to take this trade, guys, from $175 up to $180, this would be a 3% trade with a low volatility stock. So thank you very much, bro, for bringing up PepsiCo. I am going to put it on my watch list, because at the current levels of the markets, I am actually trying to stay away, as I just told you guys, from higher multiple stocks. I mean, I can take trades with those stocks, but quick trades only. I think that PepsiCo above $175 could be a decent stock in order to take a swing trade, because this is not a stock that moves very quickly over here. Good suggestion on PepsiCo. Thank you. Just skip me. Sorry about that. Lulu and TLT. Absolutely. Let's go over Lulu and TLT. And, okay. Sorry about that, Micaela. Okay, Lululemon. You always bring up Lululemon. I recently took a loss on Lululemon. I hate this stock. Okay, went up today 0.88%. Do you shop at Lululemon? Micaela, I'm just curious. Maybe you shop at Lululemon. This clothes is expensive, right? I mean, the other day I stepped in a shop and I was like, no way, I am not buying anything here, guys. Jesus Christ, what an expensive clothes of Lululemon. So big resistance for Lulu. Right below the 100-day moving average, $324. RSI sitting at 62 points on the 4-hour chart. If Lulu can take out $324, which, by the way, guys, is very close from a previous area of resistance back from early September and early August of last year. So this area, guys, between $323 and $327 is a potential supply zone for Lulu. It's going to be, it could be a potential tough spot for the bulls, but if the bulls happen to be able to take out both $323 and $327, they could be filling the next important gap up to $335, previous resistance back from early August. So taking into account that we have seen a very decent process of consolidation of Lululemon above $300, this could be a trade, guys, with the bulls taking out $323 and $327, and after that, filling this other gap up to $336. This is an interesting chart. Not a very good looking chart, but it is an interesting chart. I am also going to put Lululemon on my watch list. Let me take a look at the market structure of Lulu. I love trading Lulu, but I will not shop there. I just said, there you go. Me too. Yeah, very expensive clothes. So now, are you guys shopping at Goodwill? Come on, guys, speak the truth. Where are you guys shopping at? Goodwill or Lulu? Which one do you prefer? Huh? Speak the truth. Okay, Lulu. Market structure. Take a look. This is not a good looking market structure. We have an ascending supply that is way above the average. And as of now, the demand is flat, but it's below the supply. Yes, Michaela, there you go. I have shopped at Goodwill. No joke, guys, for real. I have shopped some stuff. Yeah, no joke. They sell nice stuff. Very well priced. Okay. Watch out, guys. We have an ascending supply that is above the demand. So I'm thinking, or the market structure confirms to me, that this area between $323 and $327 is going to be a very tough one for the bulls of Lulu. So if they happen to fail at around these levels, this could be a short. I might be grabbing some puts of Lululemon once again. TLT. I was talking, I was telling you guys about TNX because, yeah, Lina Marie is asking about, okay, is asking about, Mikael is also asking about TLT. I will go over Meta in just a second, guys. Okay, in the case of TLT, TLT is inversely correlated to TNX, to the 10-year Treasury yield. You know that, you guys know that bonds and bonds yield are inversely correlated. So in the case of TLT, this is an indicator or an index. This is actually an ETF, but this is a market structure indicator that I use on a daily basis. If TLT is going lower, that is a bad sign for the bulls. And on the flip side, if TLT is going higher, that implies that most likely yields or bond yields are going lower, and that's a very positive sign for the most part for higher multiple stocks, tech-oriented stocks, and so forth. In the case of TLT, we have a very big support coming up over here, 100-day moving average at $102. If this support happens to be taken out, we could be seeing a gap down to $99, previous support back from late December, or on the flip side, if the bulls can hold this 100-day moving average as support, they might be gathering momentum in order to make another push higher and maybe try to fill once again a gap that they have unsuccessfully filled in terms of bursting above it up to the 200-day moving average. Take a look. This is a downward sloping 200-day moving average at which the bulls failed on January 18th, and they also failed on in early February. So very big resistance for the bulls. This is still a downtrend for bonds over here. Remember that TLT is for the most part a long-term bonds ETF. This is an ETF for the 20-year Treasury yield and the 30-year Treasury yield, actually. So this is obviously inversely correlated to TNX, to the 10-year Treasury yield. So not a good-looking chart. And by the way, I'm talking about market mechanics. If the support of the 100-day moving average happens to be taken out at $102, this is a bad sign for the bulls. This might be a sign that a potential rug pull is coming up. Okay, Meta. I was asked about Meta. Let me see what is going on over here. Let me take a sip of the 7-Up. Okay. Went up today 0.03%. And if you guys remember, guys, we went over Meta. I called this one out correctly. If you guys remember our live stream of last week, I told you, if you guys remember, that Meta was trying to unfold some sort of bullish flag pattern over here. And I told you, if this bull flag happens to be invalidated, watch out for more downside pressure for the bulls of Meta. And take a look at what happened here. The bulls or the bears did invalidate this bull flag, and we saw a retracement of how much? Of almost 8%, because Meta broke the lower line of this bull flag pattern, or of this. This is not an academic bull flag, but it looks like a bull flag. Let's just put it that way. So Meta dropped 8% after having invalidated this bull flag, and it found support at $172 as of now. The bulls are making a test of this ascending 5-day moving average at $180. So this is going to be a very important spot for the bulls of Meta tomorrow. Watch out for Meta consolidating slightly above $180 and maybe filling this gap that they already filled on 3 occasions before, but they couldn't burst above the higher spot of this cap to the upside, $193. This could be a very interesting trade to the upside, guys. Let's say that Meta consolidates slightly above this ascending 5-day moving average. Let's say that the bulls gather momentum over here and they make a push to the upside up to $192. They already failed at $192 ish on 1, 2, and 3 occasions. So if we were able to take this trade, we are talking about a 7% profit trade. Very interesting chart over here. And on the flip side, watch out. If the bulls failed at taking out this ascending 5-day moving average, we could see Meta visiting or paying a visit once again to $173, which is an area in which they found support at in yesterday's trading session and also in or on last Friday's trading session. Let me take a look at the market structure of Meta. Another interesting technical chart over here. And in the case of Meta, what is supply and demand looking like? We have an ascending demand, and that is way above the supply, but we have also an ascending supply that as of now is above the average. So sellers are around there. So are out there. So watch out for this 5-day moving average. Very interesting spot for Meta. Anytime, absolutely. Terry Watt says defensive, recession-proof stocks like KHC and Coca-Cola, correct? I have been buying defensive stocks, guys. I am a believer. I might be wrong when it comes to this hypothesis, but I think that we are heading to a recession. I think that the Federal Reserve is going to, for the most part, force a recession in the U.S. in order to control inflation. So I have been buying defensive stocks such as United Health. I have been buying defense contractors such as Lockheed Martin or General Dynamics. I also recently I recently opened a position on Pfizer. Today I got accidental petroleum calls. I think that oil is going higher. So when it comes to my positioning, as of now, as I just told you guys, I think that the markets are very expensive valuation-wise at these levels. So I am staying away from higher multiple stocks, tech stocks, and so forth. And I am starting to position myself when it comes to defensive stocks and when it comes to the inflation trade. When we talk about the inflation trade, I am talking about, or we talk about industrials, we talk about energy, and we also talk about materials. So I am positioning myself in a defensive way, and I don't like the way that the markets look as of now from a valuation standpoint. And again, guys, the shorts look pretty well. I am also a long-term investor. I like valuations. As of now, we have a forward PE in the case of the S&P 500. I know For most technical traders out there, that's bullshit. It doesn't, you don't need to pay attention to valuations. In my case, I do care a lot about valuations. These markets are overextended. They are trading on very higher multiples, and I don't like the markets over here, guys. I am simply positioning myself in a defensive way, and yes, I'm taking trades with tech stocks and so forth, but with very tight stops. Okay. Money flow from investors is showing movement into bonds. I wonder how significant this will affect stocks. Yeah, the thing with money moving into bonds is the fact that the markets are thinking that the Federal Reserve is going to be pivoting sooner rather than later. So if you believe that interest rates are going to go lower, let's say anytime soon or throughout this year, so buying bonds at these levels is a good deal. Obviously, you're going to be making good money. You're going to be locking in a higher interest rate when rates might be going lower according to the markets. I think that the Fed is going, I do believe that the Fed isn't bluffing. I think that the Fed fund rates are going to remain, or I think that the Fed is going to go higher for longer. But that's the thing when it comes to bonds. And that's a reason why if bonds go higher, that's good news for the markets. So that implies that that bond yields are going lower, and that's a message that the bonds market is sending out there in terms of let's say, a friendlier Federal Reserve when it comes to hiking rates. So that's a reason why bonds could be going higher. So we have some participants in the bonds market that believe that rates are going to go lower anytime soon. And if that were the case, then you should be buying treasury bonds and locking in a higher rate, because those rates are going to be more valuable over time. So that's what is going on in the case of bonds, even though TLT is still in a downtrend. Okay, something about Boeing, please. I think that they got a contract. They were awarded a contract, I think that from India. Very good looking short, guys. Nothing to say over here when in the case of Boeing. It went up today 1.30% close. The trading session at $218.45. Clear breakout over here above $313. RSI at 67 points. And the 4-hour chart looking pretty well. So this is an interesting chart because take a look at this, guys. Unlike the push to the upside that we have seen in the most recent runners, the Airbnbs of the world and the NVDAs of the world and the Teslas of the world, this push to the upside, this push to the upside of Boeing has been steady, slowly and steady. So this is a very healthy push to the upside. So this is a whole different story. If the bulls of Boeing can hold $213 as support, which is an area of resistance in which they have failed on multiple occasions, or this is a previous resistance on which they failed on multiple occasions, but they finally managed to burst above it in today's trading session. This could be a sign. I'm going to pull up here a 3-year chart that they are gathering momentum. The bulls could be gathering momentum over here in order to fill the next important gap up to $230. This is a previous resistance back from January of 2022. Jesus Christ. Very good looking chart in the case of Boeing. And let me see. And on the flip side, guys, if the market or if the rook happens to be pulled out, and if Boeing happens to take out this support of $213, this is a previous resistance that now is going to act as a support, then this could be a short trade. We could be getting puts from $213 down to $203. In my case, guys, I don't like shorting uptrends, crude uptrends like these ones. And this is a very compelling short. I wouldn't be a buyer of puts in the case of Boeing. Let me take a look at the market structure of a BA of Boeing. So we have an ascendant supply that today actually, or yesterday rather, managed to burst above the average And as of now, the supply is above the demand. So from a market structure standpoint, guys, we can make the case that right here, right now, we have more sellers than buyers. Not a good sign for another push to the upside. So be careful over here with the support of 213 bucks. Clear option, guys, above the 200-day moving average. We have an ascending 100-day moving average, also an ascending 5-day moving average. Very good looking chart. In the case of Boeing, I don't like the market structure, but that doesn't imply that Boeing is going to collapse anytime. Yeah, we're here to help. Absolutely. Sure, absolutely. Okay, guys, I'm going to do one more stock before wrapping it up. Walmart, defensives, consumer staples. Let me see what is going on in the case of Walmart. We are 50 minutes in. Very nice live stream. Walmart went down today 0.29% and closed the trading session at 145 bucks. This chart doesn't say much. I would be expecting, if we happen to see another rotation into defensive stocks and so forth, because while we have, guys, the Apples of the world and the NVDAs of the world and the Teslas of the world leading every rally, for the most part, defensive stocks will not count on the favor of the markets, or won't be favored by most of the market participants out there. Watch out for 145 bucks as support. This would be interesting, guys. We have a similar technical chart relative to the PepsiCo chart that we just went over. And why? Well, because if we happen to see a process of consolidation slightly above 145 bucks, this would be a sign that the bulls are gathering momentum in order to make another push higher and maybe being able to fill the next gap up to 147 bucks. This is a previous resistance back from early June. If Walmart were able to make this push to the upside from 145 bucks up to 147 bucks, this would be a 2.45% profit trade above the 100-day moving average, above the 200-day moving average. We can make the case that Walmart is kind of consolidating slightly above these two very important moving averages. RSI at 68 points, and let me see on the 4-hour chart, it doesn't say much. And let me take a look at the market structure of Walmart stores. So what is the supply and demand looking like? And we have an ascending supply that is right at the average, but as of now is above the demand. So we don't have an ascending demand over here. So let's see if the support of 145 bucks happens to hold. That is going to be important. Mike Miller asked about AMD. Okay, I want to wrap it up here with AMD quickly. Let me see. Advanced Micro Device goes up today 3.39%, closes the trading session at $85.95. Very interesting looking chart. We have AMD trading as of now the 200-day moving average, 100-day moving average. We have an ascending 5-day moving average. Watch out for 84 bucks, guys. If AMD happens to consolidate slightly above 84 bucks, this could be a sign that the bulls are getting in momentum in order to make another push higher and maybe being able to fill the next gap up to 92 bucks. This is a previous resistance back from mid-July of last year. This is a very plausible scenario. We have the RSI sitting at 63 points, very healthy from a technical standpoint. We can make the case that AMD is neither oversold nor overbought. So if we happen to see SMH, the semiconductors ETF, keep on going higher, and if AMD happens to hold 84 bucks, yeah, this could be a trade, no doubt about it. A trade to the upside. However, on the flip side, SMH happens to pull back and AMD takes out 84 bucks to the downside on good volume. We have a gap down to 78 bucks, 200-day moving average that happens to coincide, by the way, with a previous resistance back from late November and also with a previous resistance back from mid-September of last year. And when it comes to the market structure of AMD, let me see what is going on in the case of Advanced Micro Devices. What do we have over here? This is a very good looking market structure, guys. We have a semi-descending demand, but that is still way above the supply, and the supply is descending and below the average. Very good looking market structure for AMD. So according to the supply and demand, I'm thinking that the bulls have a decent shot of holding 84 bucks as support and maybe making a push up to the $92-ish. So I am going to wrap it up here, guys. Thank you very much for your attention. Thank you very much for joining up. And remember, I am live streaming for you on Tuesdays after market close. Today, I started the live stream a bit later than usual because I was watching a soccer game between Bayern Munich and Paris Saint-Germain. And yeah, I usually start my live stream serve at 4:30 p.m., but I had to watch that soccer game. So enjoy the rest of your day, guys, and manage risk accordingly, please. Remember, these markets are a bit overextended. We have already priced in a bunch of good news. Be careful, because at some point, maybe the rug could be pulled out. So be very careful, okay? Take care, guys. Enjoy the rest of your day. Thank you very much once again. See you guys in the main chat. Take care. Bye. Thank you. Bye. Good trade today.